with our next chapter, accounting, audit related issues, RPTs, and vigil mechanism. Okay. Now, over here, we are going to talk about four things: your audit, auditors, RPTs, vigil mechanisms. Okay. The first thing which comes is financial reporting standard. Everybody knows what is NDS. Okay, so now after NDS came in 2015, okay, we have two set of accounting standards now. One, Ind AS, which came in 2015. Okay, these are in corresponding to the IFRS, that is Financial Reporting Standards. Another we had earlier in 2006, that is accounting standards as per section 210 of Companies Act 1956. Very clear with this? So which one we are following now? Tell me. For those who compulsory Ind AS is applicable, only Ind AS, and for those who those companies where Ind AS is not applicable, they are adopting the second standard. Very clear with this? Okay. Now, let's see disclosure relating to accounting standards. As far as your company law is concerned, it talks about in section number 129. Okay, 129 talks about we have to adhere to the accounting standard. If there is any deviation, we have to give the reason of the deviation in the director's report. Okay. Also, when the company is a listed company, we have to see LODR regulation. Even in that regulation, they have given that if there is any deviation, then management have to give the reason in the corporate governance. Very clear with this? Now let's see how our auditor can be independent. Auditor plays very important role. Okay, it is not the person who makes the account, but he is a person who does a audit of our company. Okay, so auditor should be independent. Now how can he be independent? He should not be connected to the company, correct? So like independent director is having a definition under section 149 subsection 6 relating to his independence. We are having this under section 141. That 141 talks about disqualification and qualifications of the auditor. Out of that, we are going to see the disqualification part. So following people cannot be the auditors of the company. Now understanding, let's start. The first one talks about officer or employee of the company, correct? Then the second talks about the partner of officer or employee of the company. Okay. Then third talks about person and his relative. If they are holding any security interest in the company, holding subsidiary associate. Okay. Then it should not exceed 1 lakh. If it is exceeding 1 lakh, he cannot be the auditor. Okay. Then if he is indebted to company, then he cannot be the auditor. He has given guarantee, that means he is a surety to the company. He cannot be the auditor. Very clear with this? Understood? Person himself or his firm is directly or indirectly having some business relationship to the company or its subsidiary or its associate company. Very clear with this? That means having business relationship means there is a consideration moving from one party to another party. They are having interest. You know, I mean, do you think there will be independent audit in such circumstances? The answer is no. Okay. Then a person who is relative of a director or a KMP of that company. Understood? Then person who is full-time employment elsewhere. That means chartered accountant who is in full-time employment in other company, he cannot be a statutory auditor of the company. Like for us, we are either we can be PCS or we can be in the full-time employment. Same rule applies to the chartered accountants also. Understood? Then, if person is do see our auditor can do audit of not more than 20 companies. Very clear with this? You know this rule. But when he is auditor in the private limited company, then for counting that 20 companies, Companies like OPC, dormant company, small company, and private company where paid up share capital is less than 100 crores are exempted. So he can do audit of n number of OPCs. This is the amendment. Please remember this. Okay, you people are getting right. Neha, Mansi, and Varsha. Then, person who has been convicted for fraud, he is sentenced. See, number of years of his sentence has not been mentioned. It is just given he is sentenced, correct? And 10 years has not been lapsed from date of the conviction. So date of conviction is important. Up to 10 years he cannot be the auditor. After 10 years he can be the auditor. Clear? Then, sorry. Such person is engaged in some activities given under 144. Under 144, certain activities are given which auditor cannot render, right? So when such person is rendering the services, he cannot be auditor of that company. Understood? So this disqualification we have to see at the time of the appointment as well as after the appointment. And if any auditor incurs any such disqualification after he has been appointed as auditor, immediately he has to vacate his seat. And then board of directors will appoint a new auditor as if there is a casual vacancy. Understood? Now, see, auditor's remuneration has not been fixed under Companies Act 2013. It is only the duty of Board of Directors to determine the remuneration of the audit committee. When shareholders will not look into this matter, they will just appoint the auditor. That's it. But yes, excess remuneration we cannot pay because he is just supposed to do the audit and not to render any other services apart from the audit. Very clear with this? Understood? Now, what are those services given under 144? Accounting and bookkeeping, internal audit, accounting and bookkeeping, internal audit, design implementation of FIS, that is Financial Information System, actuarial services. You know what is actuarial services? What is actuarial services? Answer, girls. What happened? What are actuarial services? Okay, you know that. Very good. See, actuarial services is nothing but, yeah, actual services are nothing but evaluating the risk and the insurance of future. Yes, to find the premium, correct. Okay, then investment advisory services, investment banking services, rendering outsourced financial services like your BPOs do, management services and other kind of services. This all are prohibited areas for the auditor. Okay. Let's talk about section 143, which talks about reporting of fraud by the auditor. This section is divided into two parts. First part talks about fraud of 1 crore or more, another one below 1 crore. Okay, when fraud is 1 crore or more, if auditor comes to know about such fraud, he has to report it to the board of directors or the audit committee within 2 working days, within next 2 days, sorry, and ask for the representation within 45 days. Board of directors or audit committee do not revert within 45 days. He will make his own report in ADT 4. Yeah, in ADT 4, and he will forward it to the central government, also to the Secretary of Ministry of Corporate Affairs. Okay, specifying that there was a fraud. Understood? So directly he has to report to the CG. But when fraud is less than 1 crore, he has to just report to the board of directors or the audit committee. Okay, and specifying what is a nature of a fraud description, approximate amount involved, and the partners involved. Very clear with this? And then he need not report it to CG as a fraud is less than 1 crore. And this reporting is to be done within 2 days of his knowledge of fraud. Very clear with this? Understood? After that, this details has to be disclosed in the board's report. Okay? So ultimately it is going to be public. There, there is a clause of rotation of auditors. Now, why rotation of auditors is important? Or rotation of auditor is important because if same person is doing audit for a number of years, then he will have a indirect interest in the company because the relationships will be built, everything will be built, right? Hence, the auditors has to be rotating. Very clear with this? Understood? And then this has come under section 139, rule number 5. This is not applicable to all types of companies. This is just applicable to companies, public companies having paid up of 10 crore or more, private companies having paid up of 50 crore or more. See, over here amendment is there. Earlier provision talks about 20 crore, but now it is 50 crore. And your modules also provide for 20 crore. So please make the changes. You understood? Okay? Okay, so unlisted public company paid up 10 crore, all private companies paid up 50 crore, and all companies having the borrowing limit from financial institutions, bank, and public deposits 50 crore or more. Very clear with this? Sorry, ma'am, why not listed? No, it's applicable to all listed companies. And okay, see over here it is written, no listed company or company belonging to classes. So first is it is applicable to all listed companies and then this classes. Understood? Okay. Then so all the companies having when a public borrowings from banks, PFIs of 50 crore or more, for them rotation of auditor is important. Now what does this rotation mean? Let's see. Companies cannot appoint or reappoint an individual for more than one term, and one term is 5 consecutive years. For auditors firm, it is 2 terms of 5 consecutive years each, means total 10 years. Very clear with this? Understood? Individual will be appointed for 5 years, and then firm, if appointed, it will be for 10 years max. After that, cooling period of 3 years is required, and only then they can be appointed. Very clear with this? Understood? Now when we talk about any firm or any LLP, then when audit firm is has completed 2 consecutive years, is not eligible for being appointed, reappointed as an auditor in the same. Correct? But say for example, where you have a LLP or a firm which has completed 2 years and you are appointing a new firm where you have a common partner. So even where the partner is common, we cannot appoint that new firm also. Very clear with this? Understood? Any doubts? Any doubts in the rotation of auditors? Let's move to the auditing standards. Okay, Ind AS was different. Auditing standards are different. Auditing standards are given the 143. They tell us about how auditor has to make its report. Okay, auditor should make compliance. So, auditor has to take into account all the provisions of Ind AS, also the auditing standard while making his report. Okay, and then government, see, CG has prescribed, has told NFRA, that is National Financial Reporting Authority, to make or give new auditing standards. But till the time NFRA give us new accounting standards, which we have earlier one, which are given by ICAI, it they are to be followed. Okay. Now let's talk about the internal audit. Internal audit is very, very important. It was not there under 1956, but it is there under 2013. It is not applicable to all types of companies, but only certain classes of companies. Correct? So internal audit is very important for evaluating the future risk so that there is no sudden breakdown in the functions or the affairs of the company. Okay, it is for measuring and evaluating the effectiveness of working of organization to ensure all laws, rules, regulations are properly adhered to, identifying the risk and suggesting the remedial measures. 138 talks about the internal audit. It talks about the mandate. It talks about that it is mandatory for certain type of company to appoint a chartered accountant or a cost accountant or any other professional. If board thinks that he will be able to do the internal audit, then he may appoint. So, when a company secretary can be an internal auditor if board of director thinks so. Very clear with this. But an internal auditor and a statutory auditor cannot be one person because under section 144, internal audit is prohibited category of service. Clear with this? Okay. Now let's see the applicability. It is applicable to all listed companies. Then for unlisted public companies, paid up capital 50 crores or more, turnover 200 crores or more, outstanding loans from banks, PFIs exceeding 100 crores, then public deposits, outstanding deposits 25 crores or more at any point of time. To them it is applicable. Everywhere you have conjunction or. Okay. Then for private company, turnover 200 crores, outstanding loans from banks, PFIs 100 crore at any point of time. To them, internal audit is applicable. Very clear with this. Internal auditor may or may not be employee of the company. It is not given shall not be an employee. So one employee can do the internal audit. Okay. Secretarial audit. 204 talks about the secretarial audit. It's applicable to all types of listed company and other unlisted public company having paid up share capital of 50 crores and and turnover of 250 crores. Clear? Secretarial audit is done by the member of ICSI, that is company secretary only. Okay. As per LODR, even certain other subsidiaries which are private companies but which are material subsidiaries of the listed company, when they have to do the audit and they have to annex the audit report to the director's report. Very clear with this? We have constitution of NFRA. NFRA is defined under 132 of Companies Act 2013. Okay. Now, powers of NFRA to monitor and to enforce the compliance of accounting standards or auditing standards, see the quality of the auditors of the company, investigate the auditors of the company. Now, what all types of companies can be investigated? Listed companies, then unlisted public company having paid up of 500 crores, turnover of 1000 crores, an aggregate of loans, debentures, deposits of 500 crores as on any 31st March. In certain insurance companies, banking companies, companies engaged in generation supply of the electricity and other acts which are provided by the central government. Very clear with this? Then body corporate which is in India or outside India which is having subsidiaries in India and which is exceeding 20% of income of such body corporates which are investigated and by NFR. Okay, then this will be called as a material body corporates and hence even they are covered under this section. Very clear with this? Now, what are the functions of NFRA? They will have to maintain the details or particulars of the auditors, recommend the accounting standards, auditing standards approved by CG, monitor and enforce the standards, oversee the quality, promote awareness of the standards. Cooperate with national and international organizations of independent audit regulators, perform other functions as may be specified. They have to monitor and enforce accounting standard as well as the auditing standard. Other duties like they will require any of the auditor of the company to do the proper audit and ask for the report also. They will oversee the quality to protect its reputation and reduce the risk. Then it may also ask for the additional information. It may also ask auditor to be present personally and give certain answers. It will monitor its performance every time. Then it should see to it that it does not disclose any of the confidential information which is defamatory in nature, which is not good for the company. Then it may send a separate report to the central government. Overseeing quality. Now, how it will oversee the quality? It will keep an eye on such of the auditors where non-compliances are done. Well, when the quality is also low, they will see to it the quality is properly maintained. Okay. And there are certain powers given to NFRA. First, very important power is power to investigate. It's the same power like your Civil Procedure Code under 1908 has. Okay, so it can investigate either suo motu or any reference made by the central government and relating to any professional or other misconduct by member of ICAI. Okay, penalties which it can impose is to 1 lakh, which may extend to 10 lakhs, or fees or 10 times fees which we has received for doing that misconduct if the misconduct is proved by. You can also debar the member from practicing up to 10 years. As I told you, he has been vested with power of Civil Procedure Code 1908, like discovery, production of books of accounts, summoning, enforcing attendance of person on examination on oath, issuing commissions for examination of witness or documents, inspection of any books, registers, other documents. It also been provided here. This is also very important. Whenever proceedings are going on with the NFRA, none of the other case can be filed on the same matter to any other authority. Very clear with this. So NFRA will always be prevailed. But yes, when any person or the auditor is not happy with the decision of the NFRA, that means after proceeding has been completed, it can definitely file appeal with the appellate authority. Okay. Now let's see what are the related party transactions. Okay. Under related party transactions, three things if you understand, this is very simple. First thing is what is section number 76, that is definition of a relative. 77, 2 subsection 77 related party definition. Then what are the transactions of related parties? Okay, so only these three things are important to be understood. Rest all is very simple. Let's first see subsection 77. Under 77, what all things are included? Person's HUF, spouse, father, mother, including stepmother, stepfather, son, his wife, including stepson, daughter and her husband, stepdaughter not included, brother, sister, including stepbrother, stepsister. Very clear with this? What all things are excluded? Grandparents, grandchildren, stepdaughter, brother's wife, sister's wife, inclusive is stepfather. Very clear with this? Okay. Then 276, a person, that means a person is a director, KMT, or is related. They are related to the company where such director is a partner in the firm, or where the director or his relative is partner in the firm, then firm become relative party. A private company will become related party if such director or manager is member or director of such company. Over here KMP is not included. Okay. A public company will become related to this company where the director or manager is holding with his relative 2% or sorry, more than 2% of paid up share capital of the company. Understood? For private company, if he is holding even a single share, he becomes related party. Public company, it is 2%. Okay. Then this body corporate will become related party if such body corporate is acting as per the directions of director or manager of. Understood? Then any person on whose advice the director or manager is accustomed to act. So even this party will become related to this party. Any doubts? Understood the definitions of relative, related party. Okay. Now let's see the transaction list first of all. The transaction list. Let's identify the transactions. First, sale, purchase, or supply of any goods or materials. Selling, otherwise disposing of property. Leasing of property. Availing, rendering services. Appointment of agent for sale, purchase of goods or property. Appointment of any person in place of profit in the company, and underwriting. This all are the related party transactions. Clear? How do you determine whether particular transaction is relative or not? You have to find out whether a person is related. How do you find out? Go into subsection 76, go into subsection 77. Correct? And when there is any transaction between such people and company, find out whether it is relating to this or not. If it is there, then you come to conclusion it's a related party transaction. Clear with this? Along with subsection, we have different provisions under Ind AS. Ind AS provides us with a broader definition of a related party. It talks about a related party is person entity that is related to such entity who is a reporting company. Okay, now let's see who are such person. A person who is a close member of that person's family, and so that person will be the related party to the reporting company if that close member have control on the reporting entity, has significant influence in the reporting entity, he is a member of KMP of the reporting entity. Understood? Good evening, Sahil. Okay, then let's talk now. When we have evaluated that it is a related party transaction, the next step is the approval process. Okay, after approval, disclosure will come. Clear? So now we approval is divided into two parts. Board approval or audit committee approval in one hand, and on the other side we have shareholders approval on the other hand. Okay, when you are into limits which are provided under rule, then which limits, that is sale limit, then you have other limits and so on, then you need to just take the board approval or the audit committee approval. But when the company is a listed entity, then you have to take the shareholders approval, audit committee, omnibus approval. Very clear with this? Now let's see, when we are taking the board's approval only, what all things we need to disclose in the agenda of the board meeting. Nature of the transaction, then nature of relationship, nature, duration of the contract, material terms and conditions, advance payment if received, manner of determining pricing, other commercial terms, whether all factors relevant to contract has been considered or not considered, if omitted then why omitted, any other relevant information proposed. Okay. Now, when the shareholders approval is required, when there is sale purchase of agreement and that amount is 10 exceeding 10% of 10 turnover of the company. So now 100 crore is not there. This part is omitted, but the module contains this part as well. Clear with this? So it is only the first part When the amount of sale or purchase or supply of good is exceeding 10% of the turnover of the company, then we require shareholders approval. Very clear with the amendment? Any doubts? Or we are talking about as services rendered. Services rendered if exceeding 10% of turnover, then we have to seek the shareholders approval. We have to disregard this 50 crore. Okay. For appointment of agent, when the transaction is exceeding 10% of their turnover, then we have to take the members' approval in the general meeting. If there is any lease, sale, buy of a property is exceeding 10% of the net worth, then we have to seek shareholders' approval. The second part is omitted, that is 100 crore is omitted. Okay. When we have done any underwriting agreement, subscription of share, amount exceed 1% of the net worth, we have to take the shareholders approval. When we are appointing the related party in the place of profit in the company's subsidiary or the associate company, and the monthly salary of such person is exceeding 2,50,000, then we have to take the shareholders approval in the general. Very clear with this? Any doubts? Everyone sure? Everyone understood what I told? What is the amendment? Yes or no? Okay. Just see the first part. Second part is amendment. Second part is omitted. Okay. Now, other provisions relating to RPTs are when there is a wholly owned subsidiary and wholly owned subsidiary has entered into some related party transaction. But for that wholly owned subsidiary, holding company has in its general meeting passed a resolution, taken the approval, then it is allowed because it is a WOS. Very clear with this? Any doubts? Okay. When there is any related party contract already entered and where board resolution was important, not taken, audit committee approval was required, not taken, or shareholders approval was required, not taken. So related party transaction has been entered into without the approval. The same has to be ratified within next 3 months. If not ratified, then board of directors have option to make it void. So it is voidable at the option of the board of directors. Very clear with this. And once board of directors make the transaction void, then director who has entered into without asking for the permission have to indemnify against the losses. Clear? Let's see what are provisions under SEBI LODR. As I told you, SEBI LODR, some extra provision is there. There is something called as a material related party transaction. Now, what is material related party transaction? Where amount of transaction is exceeding 10% of annual consolidated turnover of the listed company. Then it is a material related party transaction. Okay, and this requires approval. From 1st July 2019, one more transaction is termed to be relevant or the material transaction. That is, if it is entered between company and related party relating to any brand usage or royalty payment has been made, correct, and that amount is exceeding 2% of annual consolidated turnover of a listed company, then it is a material related party transaction. The related party transaction under LODR requires approval of audit committee. Audit committee can give the omnibus approval. Omnibus approval means what? Cover approval, blanket approval. Correct? This blanket approval will have complete details of all the transactions which will be entered by the company during the financial year. And in no case this transaction, the amount of this transaction cannot exceed 1 crore. When it exceeds 1 crore, omnibus approval will not be applicable. It requires a separate approval. Very clear with this? This omnibus approval is generally for 1 year, not exceeding 1 year. Okay. Omnibus approval will specify name of related party, nature of transaction, period of transaction, maximum amount of the transaction, then what will be the base price or the current contracted price, other condition as may be given by the audit committee. Okay, same 1 year. Okay, now exemptions are given to certain companies. First is transaction between two government companies. They are exempted from following LODR. Second, transaction between holding company and its WOS, whose accounts are consolidated and placed before the general meeting in the general meeting of the holding company. So they need not take approval under this. Very clear with this? Understood? Yes, Sahil, you have any doubts? You were typing something and then again disappeared. Now, one more necessary thing, one more disclosure required by the listed company. Within within end of the half year, they have to publish their standalone and consolidated within 30 days. And in that, they have to disclose the related party transactions. Now, the last part of this chapter talks about the vigil mechanism or the whistleblower. Now, there are different types of whistleblowers. First is internal. Internal whistleblower means employee complaining about the higher, that means the boss. Correct? This can be of different, this may be because of various reasons like disloyalty, improper conduct, and discipline, etc. etc. Then external, where wrongdoers are pointed by the this provisions checklist checked by the practicing company secretary. Yes, even they are checked by the company secretary of the listed company also. Okay, and if there is any non-compliance, then practicing company secretary will give a qualification mark in its secretarial audit report. Okay, now external whistleblower, that means the person are reporting to the outsiders like media, public interest group, etc., etc., directly whistling into the ears of the media only. No need to tell to the company first. Okay, alumni, over here whistleblowing has been done by a former employee who is not the current employee of the company. Then open, where identity of the whistleblower is revealed, it is called as the open whistleblower. Personal whistleblower means the person wants to harm the particular person, so he is disclosing his wrongdoings. This everybody does, right? Personal whistleblowing. Then impersonal means they want to harm a group as well. Correct? That is impersonal. Then government, we are whistling blowers against the um, unethical deeds done by the government officials. Corporate means corporate has done something wrong in the business, then we are blowing the whistle. Okay. Then Sarbanes-Oxley Act 2002, main policy of all the whistleblower policy is just to protect the victimization of person who is blowing the whistle. Okay, so their policy talks about make it illegal to discharge, demote, suspend, threaten, harass, or discriminate against whistleblowers, establish criminal penalties up to 10 years for executors who retaliate against the whistleblower. Retaliate means badla lena. Okay, require a board audit committee to establish a procedure, allow the secretary of labor to order a company to rehire terminated employee with no court hearing, give whistleblower right to a jury trial by passing months or years of administrative hearings. We are not concerned more about the Sarbanes-Oxley Act. We have to see our Act 2013 also. We'll see LODR guidelines. And this vigil mechanism is applicable to all listed company and other companies having public deposits and borrowings from banks, PFIs exceeding 50 crores. So they have to establish a vigil mechanism policy, and the head will be the chairman of the audit committee. Clear? So where there is an audit committee, the audit committee will look after the vigil mechanism and also the whistleblower policy. Where there is no audit committee, the board of among the board of directors, one or two directors will be handling this particular policy. Okay, they will have to frame the policy for safeguarding the victimization of the person. Details of establishment has to be given in the board's report wherever it becomes applicable. Generally, audit committee will look into this matter as I told you. Then, if there is any repeated complaints against any director or employee, then audit committee or the board of directors will take appropriate action against them. Okay. Now, guidelines under SEBI, that is LODR, it is applicable to all listed companies. So they have to make the policy for protecting their directors and the employees. Correct. The chairman of the audit committee will be the head of this vigil mechanism, or they it will be responsible for making the policies, and the policies have to be published on the website of the company. It with this chapter we have completed chapter number 7. Anybody